Hey everyone, welcome to Smart Investing. I have three stocks that I will be going over for you guys today. Two of these banks I've heard of. I've heard of PNC and BCS. So here we go. Those are the stocks that I have, and also SFNC, Simmons First National Corporation. So let's just jump right to it. Ticker symbol SFNC, $18.12. Market cap is at 2.3 billion. Volume is at 588K. Looking at the chart, well, let's look at the first page, then the chart. PE ratio close to 10, slightly undervalued. PV telling me it's very undervalued. Earnings are pretty weak. 52-week high and low, difference of about $10, a fair range. Dividend is at 80 cents. Dividend yield is at 4.42. So these numbers are weak, especially for the market cap. Really, even if it did have a different market cap, just the numbers are pretty weak. Shows that it is in a long-term downtrend. You can see here ever since 2022. This stock is not liked. And again, this falls in the banking services sector. So definitely for sure this sector has a lot of unfinished business, as I like to say, trickling down, that is going to head to a chaotic scene once again. So moving on to the quant ratings, we have here, based on 6 analysts, we have majority of them saying it's a hold, so remain neutral, and then a few saying that it is going to underperform. So the highest rating for the quant rating is 7.46, which will be the value. I can get that. Can get behind that because of the price. Overall rating is 3 out of 5. I don't know why, but I disagree with the overall rating. It needs a lot of work. Earnings estimates and actual results. Here we go. Q2, they have missed, and they guided it higher for Q3 2022. They beat those estimates, and then in Q1 they missed by a little margin there, as you can see, between those two dots. And for Q2 2023, those numbers will be revealed in mid to late July. And they'll be looking for an estimate of 41 cents. So moving on to the cash flow, I don't even think I should look at the other key indicators, to be honest, since it needs a lot of work. So we're just going to jump right to that. Operating cash flow, and then investing. 322, so 624. Wow, so they are close to $1 billion in negative cash flow. That does not look good. So definitely stay away from this stock. Please avoid it. It is not good at all. Moving on to the next one. Barclays, ticker symbol BCS. Barclays is a $30 billion company. Share price is at $7.93. Volume is at 6 million. Very active stock. 52-week high and low, a difference of only about $4. Earnings are pretty weak. PE is at 9.6, still undervalued. Price to book show me is very undervalued at 0.44, not even close to 0.5. Dividend yield is at 7%. Dividend payment is at 55%. Sorry, at 55 cents, not percent, cents. So you're only looking at about, I don't know, not even 20 cents a share. I don't know, 15 cents, about 15, 14 cents each quarter. So I want to see if this company, where's the headquarters? UK, I thought so. I thought so. I knew it was an American company. I was wondering which European company was it. 5-year chart, we can see it looks pretty flat. It's had its momentum up here in 2021, like so many companies for that year also had a good year and uptrends, but now facing the reality of it, it's going back to its average, which would be the 200 EMA, and then it's actually on par with that. So for the most part, we have here that it is staying on top of the line, literally just following that line to see any further confirmation. You can see a lot of gaps down, so I wouldn't be surprised if it goes back down and then right back up to its original average for the 200 EMA. Moving on to the analysis page, we have here on two analysts. One says hold, another one says sell, and this is actually a strong sell. So obviously Wall Street does not like it. There is a lot of value in it, meaning it's very, very cheap. And the momentum is pretty strong too, obviously, because it gets traded a lot. So it's hard for it to actually break out of that $10 range for its high. Looking at the financials, digging in deeper, it's not giving me any estimates, so I don't want to be inaccurate. I'm going to move on to the next. And again, for the key indicators, it's not giving me anything up to date. That's because it is an overseas company, which is kind of stupid because still, this is a pretty strong market cap company. So anyhow, we're going to go into the cash flow and see if this is a good company or not. So they do have positive cash flow. So we're talking at least 9 billion in positive cash flow. So they can definitely afford the dividends. They just need a lot of work. And they need to be favored more by Wall Street for it to gain a little bit more respect, because obviously the stock is not liked. So I'm sorry, it has positive cash flow, but those numbers have to get better by wide margins. I don't know what is going to take for it to get better, but it's a very active stock, but it needs to break those 52-week highs and work on the overall satisfaction on the success of the company. Moving on to the last one, PNC Financial, American Bank. We have here market cap at 50 billion, volume at close to 2 million. Very, very active stocks here. Dividend payment is at 6. That's unheard of. Earnings per share is at 14.6. PE ratio is very undervalued. Price to book is about 1, so a little bit undervalued. Dividend yield ain't too bad neither at 4.74. 52-week high and low. Really good range. We're talking about a $66 range. Looking at the chart, we have here decent numbers. I know I had a drop back in March, It's very, very obvious. So from 144 to 126, this is definitely a company that has potential to gain its original state for the charting. So I could see this company being in favor through Wall Street just because it's one of the top 10 biggest banks in the US. I would see no problem for it gaining right back to its 200 EMA. Moving on to the analysis here for the quant ratings. Highest rating was quality. Obviously, they are uh, a big player in the market, and I can see why. Various locations throughout the U.S., and we're just gonna look at the financials. They beat Q2 expectations. They beat, then they missed in Q4. They beat Q1, and now they're starting to lower their guidance for Q2 2023, and it looks like it's a pretty drastic downtrend from the last estimate. Moving on to the annual numbers, and then we have here ROE, pretty decent. Their margins are pretty average. The debt, so there we go. Revenue, about the same. Now it's going to come back to the balance sheet. 9. There are at least 4. So these guys are actually, they are in negative cash flow. I'd say less than $1 billion in negative cash flow. I'm sure they can make that up from their net income, so that's exactly what they might be doing. So less than $1 billion, so they can easily use that from their net income. They have to get better in their cash flow. They are fortunate enough to be a really big market cap player in the stock market, but when it comes to your numbers and not doing what you're supposed to, and then sort of relying on the stock market itself instead of trying to be a good company, I think some people are just getting laid back when it comes to the board of directors or the CEOs. So, yeah, they're just letting the market do the work, and that shouldn't be the case. There needs to be various ways to be a good company. So looking at the dividends, since they're really high, so they give pretty good raises. Look at 10-cent raise from 2021. From April to July, it was a 10-cent raise, and then from January 2022 going into April of 2022, that was a 25-cent increase. And thus far, they still continue to pay the $1.50 dividend payment. If we look back in history, they have a track record of doing pretty good raises. As we can see here in 2015, just a few cents. And then I'd say ever since 2017 in April, that has shifted into a bigger income portfolio, I guess, and more structured in that way for when it comes to income. So if you're looking or thinking, or do you have an income portfolio, sure, I can see this company. I'd say yes to this company overall. So I would say yes, even though they have negative cash flow. Again, they are just a respected name, and that is why. So there you guys have it. I have SFNC, BCS, and PNC. So thank you guys for watching. I'll see you guys in the next one. Take care. And this banking services sector, trust me, I'm not too far away from finishing the whole list. So I know it's boring to talk about the same sector, but it has to be done. Not only for you guys, but for my own personal uh, log and experience and data tracking. So thank you guys for being patient with me. Whether you're watching these videos or not, again, I keep it for my own log. So I use this to come back to my references when it comes to uh, market data. So again, thank you guys, and I'll see you guys real soon.